We are watching Tesla, though, first this morning. The stock has been under heavy pressure. You see they're down nearly 14 points after yet another executive shakeup. The company also posted a bigger than expected loss in the second quarter. Joining us to break down the numbers for us, Tasha Keeney is analyst at ARK Investment, and she is with me here on set. I want to start with the big executive shakeup. You know, our Melody Hom here, she counted the number of executives that have left over the last year, 106, where you look at director level and above. Mm-hmm. This latest one, though, J.B. Straubel, is this big one because he's been there from the very beginning. How much of the stock pressure we're seeing today is a result of that?
Yeah, you know, I agree that's a big takeaway from the call. And J.B. Straubel, he's a big face of Tesla. He's been there since the beginning. He's the battery expert. So would we like to have him stay at the company? Sure. But, you know, to your point, there's been a lot of departures at Tesla. And we think the reason is it's like Tesla's accomplishing the impossible, and it makes it not an easy place to work. It's a really rigorous work environment. I mean, Elon Musk sleeps there, right? We know that these are tough hours. So it's likely that he's been with the company since the beginning. He feels like he's set them up well to do well in batteries, right? He's going to stay on as an advisor. And, we've heard the pain points for Tesla are really production and autonomous right now. So we're not too concerned is the takeaway.
So you don't think it's going to be too disruptive in terms of the broader business strategy for the company?
No, yeah.
Let's talk about the numbers, though, because we know you have been a long Tesla bull. Give me the bull and bear case based on the numbers we got yesterday.
So our bull and bear case for Tesla. So we think there'll be, first of all, 26 million EVs sold in 2023. That's up from 1.4 million. So we think there's going to be a massive growth in EVs. Tesla, we think, could lose in our bear case 2/3 of their market share. In our bull case, we think they'll lose 1/3 of their market share. So that's 1.7 and 3 million EVs sold in 2023. So basically, we think that Tesla's set up to be a leader in the space. They're 3 years ahead on battery technology. They're 3 years ahead on autonomous data and autonomous hardware. So when we talk about the Tesla killers, I mean, we still think they're years behind Tesla.
Years behind, but let's take the bear case there. 2/3 of the market share. Who's likely to take to be the biggest disruptor on that front?
Well, you know, China's pouring a lot of investment into EVs. The government is sort of mandating that as a new initiative. We see players like GM. They haven't really done that well with the Bolt, but they're certainly a player. Nearly every major automaker has been making announcements in this space. Toyota most recently sealed down some of their contracts for batteries. So we see sort of across the globe, companies are moving this way, which is a good thing, right? It validates the market. But will they catch up to Tesla anytime soon? Likely not.
So last night on the earnings call, Elon Musk spoke about Tesla's efforts on autonomous vehicles. Let's take a listen there, and I want to get your thoughts on the other end.
There's a significant margin potential for the existing fleet to upgrade to full self-driving, which most of the fleet can. So I absolutely think like long-term, we are talking 25 to 30%. Not long-term meaning like a year.
A little hard to hear there, but he said 25 to 30% there, long-term meaning a year. Do you agree? Is that a realistic number?
You know, so Tesla says that they're going to become feature complete by the end of 2019 in autopilot, and then in 2020 they would launch a robotaxi service. We think that'll likely happen in 2021. We think that they basically need a certain number of miles to prove to regulators that they're safer than humans. We think this business itself is going to be really profitable for Tesla. We think they could take Uber and Lyft like cuts off of the gross revenue, so that's around a 30% cut, and that'll have software-like margins. So I think Tesla is very credible as a leader in this space because of their data advantage. They have more miles than any other player. Actually, this week, Cruise Automation, which is GM's autonomous outfit, decided to delay their plans to launch in 2019. And Dan Amman, head of that unit, had said, basically they think they need more miles of data in order to launch. Who has those miles? Tesla.
So you've had a $4,000 price target on the stock on the low end, I think is what you said. How much of that changes if the timeline shifts for full autonomy for Tesla?
So our bear case assumes that autonomy doesn't happen at all. So in that case, Tesla is just an EV player. So our bull case, we think it could go north of 4,000, up to 6,000 if things go well in the autonomous driving business. If they're just a player that's successful in EVs, we think the stock price could be more like 500, 600, 700, or around there. So we think it'll double from today, and that's sort of what we look for in all of our investments, that they double over a 5-year period because we're long-term investors. But even if they don't achieve autonomy, Tesla's the leader in EVs by far. They have more scale than any other company right now, and no one else is building an EV from the ground up besides Volkswagen, right? And Tesla's really sort of proven that they're the leader in the space.
And your outlook doesn't change based on the numbers we got yesterday?
It doesn't change, and really, we're not too focused on the quarterly results. We're also not too focused on the deliveries, because if they're, say, like a month or even 2 months late on their timeline, is that going to change the 5-year outlook? Probably not, right? So I think we're still pretty confident as Tesla.
Okay, we'll have to leave it there. Always good to get your insight. Tasha Keeney joining us here at the desk.